Deep Dive with David Stendahl, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey there, it's David Stendahl with tonight's Deep Dive. It is December 10th, 2018. Tonight we're going to be looking at the Dow Jones, and in this particular case we're going to be pointing out certain numbers that relate to the S&P 500 because the S&P and the Dow are virtually the same. One obviously is a little more diversified than the other. But for the Dow, the short, intermediate, and long-term trends are all pointing to the downside for both that of the S&P 500 and the Dow, and the technical rating is also negative for both of these indices. Where it's a little bit different is if we take a look at the market, that there was a little more strength where these are daily bars here for the Dow Jones, and for the Dow we didn't open below that of our threshold, this support level. With the Dow, it actually opened above, but did dip in both instances for the Dow and the S&P below this major threshold. Now, it came down and actually found some support at the next lower level and then did this about face. And that's typically a pretty good sign that the market is really starting to hammer out some type of a base here. Now, if in both instances, both the S&P and the Dow should fall, I'll give you some numbers here that the lower level here, this is the not this first level here, but the second level for that of the Dow, we're looking at 23,653, and then the major support is over here at 23,426. So there is some support to the market, but because of the building out of this base where we've had 1, 2, and now potentially 3 points of reference staying above this support level, that is a good indication that the market theoretically can start to build out a base and then start to maybe head higher. Now, what we're seeing here is the 50-day moving average is coming very strong to the downside, and it's going to eventually intersect with that of the 200-day moving average. So I don't believe that the market's going to really have a thrust to the upside, but what I'm hoping for is a building of a base, and that building of a base that when the 50-day crosses below that of the 200, which is typically a bearish sign for the overall market, I'm hoping we can still stay above the level that we're at right now, as well as this next threshold to the downside, which is 24,081. So call it 2,400 on the Dow, which is being lenient. But if we can stay above that, then we could theoretically start to see over the course of maybe the next week or so a little building of a base, and then from that building of a base we might be able to see the market has a little more upside and start getting into the theoretical Santa Claus rally. But at least what we're going to be looking for is an opportunity for the market to really start to base here and have some type of a year-end thrust to the upside. So the levels that you're going to want to look at, again, and I'll put this in the write-up here, is 24,000. They're all going to be that, basically 201. The next level down is 24,081, and then we break below that at 23,653, which is pretty substantial if the market were to really come down to that level. Now we do have the major catch-all again coming up here, but our systems, if I flip back to the website, are having just entered a long position during the course of today in the Dow Jones. What we'd like to see take place is that the market consolidate and then theoretically hold on to the position while we go into this little building of a base with a long position, because the volatility of the market is so strong, you probably want to be on the long side, and then have the market really start to rocket to the upside with some type of a surge once we build out this base. So we're early on in this sell-off here, but I do believe that there's going to be an opportunity here for the basing and then some type of a rally to the market. But you really do need to stay above the thresholds that we're talking about, specifically the one that we're at right now, both in the Dow and in the S&P 500. I can't emphasize it enough that this is the critical level right through here. Any dip below that especially on a closing bar basis. But any dip below that, then we're going to be looking at these other thresholds. And if we don't come back by the end of the day and stay above that, then we're looking at a very different type of environment. And I'm sure that our systems by that time will have unwound themselves and be looking for some short opportunities. So in the Dow, again, the threshold that you're going to want to be looking at is 24,201. That's the major threshold that I'm looking for on a closing bar basis. So let's see how things kind of play out here, and we'll look at some other markets here tomorrow. Thanks very much. Bye-bye.